You're watching Stockwatch this week with me, Ray White. Well, joining me to unpack your stock-related questions today via Zoom is Devin Shutte from the Robert Group and Jordan Toy from Legacy Family Wealth. Be sure to send your question through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Gentlemen, hi. Good to chat to you once again. And all sorts of things happening this Friday. And of course, Spar, their CEO, deciding to step down. Spar's had its issues. I'm getting so many emails coming in talking about Spar and wanting to know about Spar. So, Devin, let me start with you. What's your take on Spar? Because, they're in a corner at the moment.
Yeah, they are, Ray. And generally, an exit like this of the top seat is not good news. I think it's also come pretty quickly, and he hasn't been at the company all that long. I think we're not even at 3 years yet. So, yeah, I think what it does for investors is raise a lot of questions. It also comes at a time when the group is still really trying to get a handle on, I guess, what you would call a recovery. They've really been trying to shore up their balance sheet. They've got that lawsuit from one of their franchisees. And the SAP implementation and, the kind of hangover there hasn't really gone away. So, they've been doing some of the right things to get in the right direction. And then kind of out of the blue, you get this resignation. Just doesn't bode well. And very understandably that the share's been sold off heavily today.
Yeah. Jordan, it's been sold off heavily today, but perhaps, Spar has always been a mainstay of SA supermarkets. To buy now, perhaps, because they can only come up, I would think. Maybe I'm just being very optimistic.
No, I think it's, shares can always lose further value. So that's the first point to mention. And I think Devin touched on a lot of the key points there. The announcement definitely came as somewhat of a surprise. I think a lot of that negative reaction, Devin mentioned a lot of the key challenges they've been facing, and it's been pretty well covered, the various areas where Spar has found some difficulty, notably their offshore operations. That's been in the media quite a lot recently. Things haven't been going so well there, or not, at least not according to plan. And I think that what struck me with this SENS announcement and the announcement that the CEO will be stepping down is, and I think a large part of what we're seeing in the market reaction today is the shorter term, or the surprise element in that announcement, but also the timelines involved. So he'll be stepping down according to the SENS announcements at the end of this month. Usually, at least in the big case of the big banks and some of these bigger listed companies, generally there's a much longer handover period. There's sort of how do I put it, more succession planning involved. We've got a bit of a rejigging going on here with the CFO stepping into the CEO position. The COO is now moving into the CFO position. So it does strike me as a little bit abrupt, and I think we're seeing that in the share price movements today, certainly.
Yeah. All right, let's park Spar for now. Quite a few also coming in on Goldfields and DRD Gold, having fantastic results this week. Is the industry peaking, or is there still time to get in on the game? Devin, who's smiling?
Yeah, one wonderful question. I wish I had that crystal ball working properly. The reality is the cash generated by these gold and PGM miners is just eye-watering. If you kind of take their all-in production costs and where a lot of them are releasing their results, those prices were at kind of between 3,000 and 4,000. We're now sitting at 5. If spot prices stay there for gold, it's just the party continues. But the question is where to from here. It's a tricky one. I would probably say that while the underlying fundamentals of gold, you could argue, are still intact, I think you do have to be cautious that any of these miners are geared play to the underlying metal, and any weakness in the metal is definitely going to hurt the share prices in the short term. So, I don't have a full answer for you, Ray, because it's something we're grappling with as well. But I would say, if you are going in now with fresh capital to deploy, I guess position sizing in a portfolio is key. Understanding that there will be a lot of volatility coming in. I think the upside is still reasonable to expect. But I think you're at a time when these miners are just generating huge amounts of cash. Looks like it can't get any better, and oftentimes that's time to be a little bit more cautious.
Yeah. Jordan, one of the things I've enjoyed this week is chatting to the different CEOs. But not one of them has said, this is fantastic, this is a great party, etc., etc. They've all been very cautious and measured in what they've been saying. So I think, I don't know if you agree with me, they've been here, maybe not here before at $5,032 as we just saw there on the screen, but they know it could come down again. They have to be careful.
Yes, of course. I think you're spot on in that summary of sort of what we've seen out of this week. Obviously, Kumba Iron Ore, as well as DRD Gold yesterday. Just briefly on DRD Gold, I thought it was quite interesting. I was giving some commentary on this yesterday, and the share price, what I thought were pretty decent results. The share price sold off around 4%, but I see that's pretty much turned around today. So interesting how the market behaves from time to time. But yes, I think these CEOs are all well aware, and probably much more so than we or the average investor is, that these cycles are exactly that. They're cyclical. So, we know that in the past, some of these resource counters, when the times are good and commodity prices are high, there is the potential for the odd bad deal to be made. So, DRD Gold specifically, it was pleasing to see in their announcement yesterday, they're returning a lot of cash to shareholders. So, as opposed to them making those capital allocation decisions, they're putting that decision in the hands of investors who can, take those funds and make their own decisions as to where the best return on their capital can be made. But to answer your question, yes, I think there was a bit of conservatism. We know that there's a lot of bureaucratic red tape in the mining sector. I mean, we had the mining in Durban recently in Cape Town. We know exploration spending in South Africa is relatively low and needs to pick up. So there are still those structural headwinds, and I think the CEOs know that better than obviously we do, and factor that into how upbeat an update they give to the market.
Yeah, indeed. Right, Jordan, let me stay with you. Got an email from Julia van Eernen. She says, gentlemen, with the budget speech next week, what are the things that your guests are focusing on or worried about, Jordan? What are you worried about? This next week, Wednesday, is our budget.
Yes, so there's quite a lot that we've been looking at and that I've been looking at specifically over the last several days and weeks. And just briefly to run through a few of them, I mean, I actually wanted to start with tax-free investments because it's something quite close to my heart. A lot of my clients are younger clients who are investing in, setting up these accounts to generate that long-term growth. But we haven't really seen much movement in those limits, right? The annual contribution limits have increased, where they're at 36,000 at the moment. But you have the lifetime limit still sitting at 500,000. And, tax-free accounts have been around for a good couple of years now. So the value of 500,000 now versus 5-10 years ago when these accounts were first established is very different. So there's this erosion that you're seeing in the ability of those accounts to generate growth. So it would be lovely to see some of those limits move. Sticking on the topic of limits, we've got income tax brackets and bracket creep. That's something that I think government is very cautious to increase taxes. We know how the reaction to VAT last year was pretty negative across the board. So what we see is sort of that stealth tax, right? The income tax brackets are not being shifted and haven't been shifted for some time to account for inflation. So that's sort of a subtle stealth tax that creeps in. We'd like to see that increase, but obviously government has fiscal pressures to manage. However, having said that, we've had a commodity. We just talked about the upbeat commodity cycle that we're in, and we would expect that to translate to better revenue. Just to briefly, I suppose, wrap it up, we'd like to also see or a little more detail around the fiscal anchor. So I don't think we're going to see a tangible exact number on that fiscal anchor, but we want to see some movement in that space. And I think I was reading an article just this morning, the International Monetary Fund is looking for that as well. So I think we're going to get a largely upbeat budget, but there's a couple of pain points in the mix there, and those are some of the items we'll be keeping a close eye on.
Yeah. Devin, we really have to watch our debt. As Jordan was saying, the IMF not happy about our debt, saying, guys, it's getting a little bit too high. What are you watching out for?
I think related to that, Ray, would be the continuation of publishing a primary surplus. So that's really what your income less your expenditure, excluding financing costs. That's been a massive positive. We've posted it for the last 2 years. I know the ratings agencies look favorably on that, and we would hope that primary surplus continues to grow. So kind of to your question, showing that the debt is going in the right way. Maybe some reduced issuance of government bonds. So that would be a key one for me. And then the other one is also just, related to government, to economic growth, and how we're going to get that going is through investment and, just really the level of investment relative to GDP. So, I'd like to hear how our Treasury is thinking about that, how we can really focus on infrastructure, which is talked about extensively, but when you're investing 15% of your economy and it should be at 25%, you've still got a big gap to close to really get that growth flywheel going. And then I think the risks, to your viewers' question, Ray, the ones I'd be watching is on sin taxes. Those have in the past been a kind of an easy target, but we've seen how in cigarettes, raising those taxes has driven the market into the illicit trade. There's concern that the same will happen for alcohol. So, just some pragmatism around that. And then, I think just any kind of tax increases are going to be looked at pretty poorly, not only by the people who are going to have to pay them, but I think just generally by ratings agencies, the like, as we've already got a fairly high tax burden, whether it's individuals or corporates, to Jordan's point around the tax brackets, and finding other ways to spend better rather than just try to tax more.
Yeah. I mean, Jordan, we have to concentrate on that, not increasing taxes. I think South Africans are fed up. But on the other hand, and Devin, you're right in what you say, we have a situation now with BAT closing its South African operations because they've got all this counterfeit stuff going on. Something has to happen here because we want to keep BAT here because we need their tax base.
Yes, I mean, Devin touched on it quite a lot there, and I think that it's a problem largely of our own making, right? We haven't seen much action in either the illicit cigarette market, and increasingly the alcohol market. Sin tax isn't just an unlimited tap that we can keep running. As these taxes have increased, we've seen more and more of that market turn to the illicit market, and obviously there's zero revenue for government in that space. So, I mean, just this morning, I know that I believe it was Diageo was talking about they anticipate that there's going to be an increase in the tax on spirits, and what is the impact that has? So, I mean, we know that there were actions taken during the pandemic, and rightly or wrongly, we find ourselves in this position now. But we need to see strong action because, just on a personal level, the closure of that British American tobacco plant, for whatever reason, frustrated me quite a lot. I mean, these are jobs that were sitting in South Africa. We know we deal and we battle with an unemployment crisis. And those are jobs that are going to be offshore now. We're going to be importing cigarettes because British American tobacco just looks at the economics of it and goes, this doesn't make sense anymore. So, those are families that are, the second order impacts are also there. There's no income coming into those families, at least in the short term. That's going to have knock-on impacts in a small way on consumer spending. So it's the wrong direction of travel, and we'd hope to see some rationality prevail. I understand government needs revenue, but sin tax I don't think is just this unlimited source of revenue that it's been treated as in the past.
Right, it's got so many questions coming in at the moment. So Angela says, City Lodge has seen flat headline earnings, but is it time to get into hotel shares? I think that's such an interesting question. It's something I've been looking at. All right, Devin, take it away.
Yes. So, I mean, I think looking at City Lodge, what you've got to decide for yourself is generally what does the business traveler look like, and what are the actions going to be, because that's the main consumer here at City Lodge. And kind of looking at their numbers that were out in December, it's looking pretty good because the main driver is how many of the rooms they get to fill. So the occupancy rate, that's been moving up. That's over 60%, and that's getting to those kind of pre-pandemic levels, which is terrific. Price increase, and as a result, their revenues grew quite nicely. So, yeah, I think they're also managing to grow food and beverage revenue, which is nice margin for them. And I think what you've got in this business is a management team that understands hospitality and their fleet of hotels pretty well, and able to execute. So, yeah, I think there's potential here. I mean, obviously, you've got a group that's got a high fixed asset base, and that comes with, a lot of maintenance and, some gearing and all of that there. But yeah, generally I like it and moving in the right direction.
Right, Jordan, do you agree? It's flat at the moment. Is it going to go somewhere?
I don't know about it going somewhere, but I largely agree. I mean, Devon's touched on the key points there, right? Occupancy, absolutely vital for City Lodge. And I mean, I know that the uptick percentage-wise in occupancy was sort of a single-digit number, which at face value doesn't seem massive, but in terms of the size of City Lodge, it's a big move in the right direction, so that's pleasing to see. Business travel, as Devin said, absolutely vital. And I'm glad he mentioned the food and beverage revenue because, you know, obviously the hotel itself, we want to see beds are being occupied, but it's obviously very positive for the business if travelers are actually spending money in their bars, in their restaurants, within the City Lodge franchise, or franchises and hotels. I think the other pleasing thing that we need to continue to see progress on is the rationalizing of that portfolio. So closing hotels that are not performing, you know, there is some capex being spent on hotels that are in the right nodes. So look, certainly not been an easy environment since the pandemic, but management working hard there to generate returns for shareholders.
Right, there we go. Angela, I hope that answers your question. All right, Jordan, I want to stay with you. And some people were asking, what's the story with Sasol? It's up today. It was up earlier on this week as well, but this comes after, not a horror story, but it wasn't doing so well. Help some people out.
So it's a good question, one that I've been getting quite a lot from some of the families we work with, at least in the last few days. My take is that what we've seen, at least in the last day or two, and a little bit longer than that, has been largely driven by the oil price. Sasol doesn't move in perfect harmony with oil, but it's a big component of that business, and largely attributable to what we're seeing geopolitically going on in Iran, the potential for military action. Does that lead to a closure of the Straits of Hormuz, which is where, you know, a huge percentage or a large percentage of ship-bound oil passes through? We know Iran's threatened to close that strait before, and sort of all of these factors coalescing to lift the oil price. And I mean, Sasol, I haven't seen what it's doing exactly in the last short while, but yesterday it was up very strongly off the back of that. And a pretty loaded statement out of the US president saying that if there is action, it might happen in the next 10 days. So I don't know what to interpret from that, but just volatility in that oil price moving Sasol around pretty significantly.
Yeah, I mean, Devin, what are you seeing from this? And Jordan, you write in what you're saying, because negotiations are happening, then they're not happening, and then all those battleships move in there. It's crazy stuff, Devin, not just for Sasol, but for markets, because we don't know where we are. Will he attack this weekend? We don't know.
Yeah, we don't know. And I think geopolitical risk, there's a large premium baked into markets generally now because of the, exactly as you say, Ray, the unknown outcomes and the unknown unknowns. I mean, it really just is very difficult to know how this plays and then what the market reaction is. So yes, you're seeing the oil price move up in anticipation of a potential invasion there. What could that mean? Yeah, I think if it is sustained, that obviously is going to help Sasol's margins on the fuel business. They did have some successes recently in the ramp up of a destoning plant when it comes to coal. But yeah, this is a business with a lot of moving parts and a lot of parts that are outside of its control. Think of, you know, the oil price, think of currencies, and as a result, you're in for a rocky ride. It's had a pretty decent year so far, and you know, trying to, I guess, coax investors back in there. But I think bottom line is you really just got to watch the underlying commodities as well, and those are looking probably a little bit more bullish than we've seen in a while.
Yeah. All right, Jordan, I've got Morris Madodusha. He says, can Cashbuild give back some cash later on? Morris wants to know.
Look, so Cashbuild, full disclosure, is not one I cover exceptionally closely, but I mean, just having a look at some of the recent figures, and hopefully we'll have a little bit more detail in a week or two when the interims are due. But it's you know, it relies on consumers looking to expand, looking to build, especially in the sort of the lower cost entry level market, and we need a stronger consumer for that, right? I mean, I think we've had, at a very zoomed out view, we've had significant number of rate cuts come through on the margins that can certainly help. But I would say, just to take that more broad picture, that until we see some economic growth coming through, I think that Cashbuild, it's a case of fighting for market share in that space as opposed to the entire pie itself growing.
Right, so let's throw the ball then to Devin. Cashbuild?
I think I broadly agree with Jordan. What I would add is that these type of DIY companies did incredibly well through COVID, when everyone was retailing and fixing up their homes when we were locked down. Subsequent to which growth has disappointed, and they really have kind of bumbled along a bit. I think there are a few consumer tailwinds starting to build in South Africa, but those are very, very small and have still got a lot to go. You've got rates coming down, you've got inflation lower. We really need growth to kick into it. But as a result, you're seeing some value emerge in this counter. They're also trying to restructure their portfolio and kind of generate returns from leaner operations, getting out of Malawi and that type of thing. So they're doing all they can in a really constrained consumer environment. But ultimately, high economic growth is needed to unlock the consumer, and a counter like Cashbuild.
Sure, that's very interesting. All right, Linda has a very interesting question. What are your thoughts on Telecom and blue label telecoms, Jordan? Telecom's interesting at the moment.
It's very interesting. I mean, you mentioned blue label as well, and we had the unbundling of Cell C. So there's a lot going on in the telecommunications space, and Telecom's been one that I've been somewhat surprised by their resilience. I think the business has sort of gone from strength to strength. It never seems to be smooth sailing in the telecom space. There's a lot going on. I know MTN has battled in the more recent past, especially with some of the operations in places like Iran, which we touched on earlier. But certainly a lot going on. I think that there, of course, are some high barriers to entry in that space. We saw Blue Label with their trading update yesterday. A bit of noise in that update, especially with the separation of Cell C, making it a bit complex to actually get a clean view on what that business will look like going forward. But I think longer term, if we look at or at least some of the structural risks that I'm somewhat concerned about for all of these telecommunications players in general is, I mean, it's been pretty well covered and often talked about the cost of data in South Africa, right? And I'm not saying that's the only factor. There's a lot of other factors involved with these businesses, but as a sort of structural risk that I see in the long term, high data prices, is that sustainable? If you have new sort of things like Starlink or Amazon's equivalent coming into the market, what does that do to, if they eventually do enter the market, what does that do to data prices and that source of revenue for our telecoms companies?
Yeah, well, that's the whole thing. All this talk about Starlink and all the rest of it. Devin, what are you seeing at the moment with Telecom?
Look, I mean, I think that their pivot to more data-led revenue was definitely the way to go. I think that's 2/3 of group revenue now come from there. But dead right, margins are going to be under pressure. I think data almost becomes a utility over time as more players, different mediums of delivering it come to the market. I still think they have somewhat of an edge in their fiber operation through OpenServe. But expect these players to continually earn lower margins.
All right, Devin, let's stay with you very briefly. Your stock pick.
Sure. So it's one we've chatted about before, Reunert. Three very key divisions in it: electrical engineering, which is renewables, and basically with the proposed grid build out and the reliance on renewable providers, they're really well placed to do that. They've got a very nice ICT division, and that's not demanding a multiple that you would see in other jurisdictions. And then also in applied electronics, which is really defense and high-tech radar, missile systems and the like that they export. We think that's a great rand hedge and quite a diversifying play in the South African market.
There we go. Right. Jordan, yours in a nutshell, what are you looking at?
So very briefly, and I know it's not maybe the most traditional of stock picks, we talked about Starlink a moment ago. I wanted to just briefly touch on SpaceX. It's obviously not listed yet, but there's the expectation that it will be listed later this year. No confirmation on that yet, so we'll have to wait and see. But it's one that I've watched quite closely and quite interested in. I mean, I think it's important also that it's not just sort of a rocket company, right? There's the infrastructure, which is obviously launches, of which they have sort of 90% share of all commercial space launches. There's the connectivity space. We touched on Starlink earlier, which is largely the main or only revenue generating part of that business at the moment, and then sort of a more defense aspect to the business. One point I wanted to mention, I think that's quite important for investors to remember, especially if this does IPO this year, is like usually our take on IPOs is that they've not been great for retail investors. There's a lot of pricing that goes on in the background that banks need to make sure that they're also getting good value in that IPO and existing shareholders. So there are always risks when looking at investing into an IPO. But I think if you're looking at buying something like SpaceX, you're taking a very long-term view. And I mean, it aligns a lot with our philosophy. We think that the direction of travel is one way. I mean, there's lots more. You hear talk about data centers in space. I think that is a long-term play. But when we look at something like this where there isn't really anything else like that in the market, it definitely piques our interest. So, as I said, could be one of the largest IPOs in history. But something we're keeping a close eye on.
Gosh, that is exciting. It really is. Gentlemen, thank you so much for joining us on Business Lunch today, and have a great weekend. We'll speak to you again, I'm sure, next week. Thank you so much. Thanks to our guest, Devin Shutte from the Robert Group, and also to Jordan Toy from Legacy Family Wealth. Now, do remember that Stockwatch pre-records on a Monday and a Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.